Hey, what's up you guys? I'm Marc Sinnott with Urbana Real Estate, and in this video we're going to be talking about buying real estate with crypto. Is it possible? How would it even work? And is it something you should consider? But before we get into all that, go ahead and hit the like button for me down below and subscribe to the channel for more real estate and finance related content moving forward. Right, let's get into it. So maybe you bought Bitcoin early on and you've just been diamond hands hodling this whole time. Or maybe you've been day trading altcoins, or you've been slowly dollar cost averaging your way in over the last few years. Or maybe you just took your stimmy and you YOLO'd that into Dogecoin, and here you are a few months later, you're a crypto millionaire. So at this point you might be thinking, should I take some of these assets and diversify away from crypto and into something a little bit more tangible, something like a home or an investment property, add something to your portfolio that pays you some returns. So how would this even work? So to start off, we have to understand, how does a real estate transaction typically work? In a normal escrow, you have a lot of money changing hands, and there's almost always a neutral third-party company. This could be an escrow company, a title company, it could be a lawyer in some states, but you have this neutral third party, we'll call them escrow, and they collect all the money, for example, the buyer's down payment, and then they deal with the mechanics of the transaction, the signing of the deed, and then they distribute the money where it needs to go. So typically the escrow company acts as sort of the central hub, and they deal with transferring all these large amounts of money. So the goal here would be to replace all the money aspects of the transaction with cryptocurrency instead of the US dollar. So first and foremost, all the parties in the deal are going to have to agree to use crypto, and especially the buyer and the seller are both going to have a certain level of comfort working in cryptocurrency, and they're both going to have to agree to use crypto instead of the dollar for the transaction moving forward. Now, some of the benefits of doing this could be faster transaction times. You know, a Bitcoin transfer could take 10 minutes, whereas a traditional wire transfer could take 1 to 3 business days. You may also avoid some of the fees that go along with a traditional bank transfer. And if both the buyer and the seller are planning on keeping their money in crypto before and after the deal, then doing it this way, you would avoid having to convert those funds into US dollars and then back into crypto. So again, you're just removing steps from the process, making it a lot cleaner, simpler, and faster. Of course, all the parties are going to have to be aware of the risks and the potential downsides of doing it this way. The big one here is trust. So because you're sending cryptocurrency directly from a buyer to a seller, and there's no neutral intermediary, you have to have a high level of trust because this transaction is nearly impossible to reverse. The next one here is fluctuations. Cryptocurrency markets tend to fluctuate wildly up and down, as we know, and this can cause a problem in a large transaction like this, and we'll take a look at that a little bit later. And lastly, you also have tax implications. Now, in all likelihood, both the buyer and the seller are going to have some sort of tax consequence from doing a large cryptocurrency transaction like this. So the first question here is going to be, do you plan to pay all in crypto or convert your crypto into US dollars, or maybe some combination of the two? When you're doing a large purchase like this, you have to think about not only the sale price of the home, but there's also going to be other expenses and amounts that come up, like agent commissions and inspectors and appraisers and escrow and title fees that have to be paid during the transaction. So unless you can find a buyer and a seller, but also a full set of transaction vendors that are all willing to accept their payment in cryptocurrency, at this point, realistically, you're going to have to convert some of your crypto into dollars in order to pay for some of these smaller amounts. Now, there are actually third-party companies that are popping up that I've seen who will manage this process for you. So you pay one lump sum of Bitcoin or crypto to this transaction management company, and then they will do whatever conversions are necessary to pay for commissions and inspectors and all these things. So you still have only one lump sum amount that you're paying to them. They manage the whole thing from there. They take a fee for their service. Right, we have to talk about the volatility problem. This is probably one of the biggest issues that comes up anytime somebody's talking about potentially buying real estate with crypto. As we know, cryptocurrency markets are incredibly volatile. They'll swing 10% up or down without breaking a sweat. So when two people are agreeing on a purchase price for a property, we still think in terms of US dollars. So let's say that the buyer and the seller have agreed to a purchase price of $500,000. And as of the making of this video, one Bitcoin is around $50,000. So this price would be equivalent to 10 Bitcoin. But maybe over the course of the transaction, which takes a few days, the price of Bitcoin goes up to 60,000 or goes down to 45,000. All of a sudden, either the buyer is paying a lot more than they thought they were, or the seller is going to be receiving a lot less than they thought they would, and somebody's going to be getting the short end of this deal. So to mitigate these risks, first of all, the transaction is going to have to be executed as quickly as possible. And you're going to have some really ironclad language in your contract relating to timing and market movements and the value of the property. And both the buyer and the seller are going to have to agree from the outset of this thing, do they want to peg the value of the house to the US dollar or to a specific crypto value? So, has this been done before? Well, in September of 2017, a new construction house in Austin, Texas actually became the first property on record to be sold entirely in Bitcoin. And even though the price of this sale was never disclosed, we do know that at the time, one Bitcoin was around $3,400. Now, while the buyer in the deal wanted to pay entirely in Bitcoin, the seller actually wanted to receive their proceeds in US dollars. So the parties used this service called BitPay to deal with the transfer and conversion from crypto to dollars. And the entire process, the transfer and the conversion, it happened smoothly and it took about 10 minutes to complete. Okay, so what about crypto and loans? Well, when a property sale is all cash or all crypto, it can be very quick, maybe a matter of a few days. But when there's a lender involved, the transaction is probably going to take 30 days or more. And the lender is using this time to get the property appraised and to go through their underwriting and their approval process. Now, let's say a buyer wants to use Bitcoin as a down payment, but still have a lender to finance the remainder of the purchase price. Well, first of all, you're going to have to find a lender who's comfortable recognizing your crypto assets and working across both crypto and fiat currency. And most likely the buyer is going to have to convert their crypto into US dollars and deposit that into escrow before closing. So what about, can you make your monthly mortgage payment or can you pay off your existing mortgage using crypto? Well, I've heard that some lenders might soon start accepting cryptocurrency for your mortgage payment. But for now though, if a homeowner wants to pay their monthly mortgage using cryptocurrency, realistically, they're going to have to convert it into US dollars, put that in their bank, and use that to pay their lender. And similarly, if a homeowner wanted to pay off their entire mortgage using cryptocurrency, as it is right now, they would have to convert that into US dollars, run it through their bank, and send that to the lender to pay off the mortgage. Now, quick side note here, Caruso, which is a real estate company here in Southern California owned by billionaire Rick Caruso, they operate outdoor malls like the Grove and the Americana, hospitality properties. They just announced that they're going to be accepting rent from their tenants in Bitcoin. And now their tenants are big national companies like Nordstrom's, the Cheesecake Factory. But this announcement makes Caruso the largest real estate company to officially accept rent with Bitcoin. And I think this is going to be a major trend going forward, that both commercial and also residential landlords are going to start accepting rent payments from their tenants in Bitcoin or in cryptocurrency. So I think very soon it's going to be possible for both businesses and for everyday people to start paying their rent with crypto. Okay, so what are the tax implications of using cryptocurrency to buy real estate? Well, first keep in mind that cryptocurrency is regulated and taxed differently in different countries and jurisdictions, and all these rules are constantly evolving as governments figure this stuff out. But as it stands right now in the US, cryptocurrency is basically treated as property, so it's similar to buying a stock. This means that the owner of a cryptocurrency, when they convert their crypto into dollars or when they use it to buy goods, they're going to be responsible for capital gains, which covers the difference from when they bought it up until when they used it. So if you're buying property with crypto and you bought that crypto at a much lower price, just be aware that you might be on the hook for capital gains tax, which covers that difference. And of course, there's tax professionals and there are online services which will help you to track your cost basis and to stay in compliance with all these rules. So, are there alternatives here? Another option if you wanted to avoid some of these issues might actually be keeping your assets invested in cryptocurrency and then borrowing against that to go and purchase property. So using a service like Nexo or BlockFi, see the link down below for a referral, a holder of cryptocurrency can actually keep their assets deposited on the platform and then use that portfolio as collateral to qualify for a loan in US dollars. So then those funds could then be used towards a down payment or towards the full purchase price. And in this way, you might actually be able to avoid a traditional mortgage, and you might actually also be able to avoid selling your crypto and triggering those tax consequences that we talked about. However, just be aware that these types of loans do tend to have pretty high interest rates, and they also have unique risks because of the inherent volatility of the crypto markets. Okay, so why are we even talking about this? Well, people with this newfound digital wealth at this point might be looking for ways to diversify and to convert some of that value into more tangible assets like, say, a home or an investment property. And at the same time, more and more people and businesses are adopting and getting more comfortable with the idea of using cryptocurrency. So while this is still a relatively new frontier, I believe that over the next few years, it's going to be more and more common to see cryptocurrency used in everyday transactions for everything up to and including a real estate purchase. And I also think that we're going to see more structures and businesses and regulations put in place to support and to normalize the use of cryptocurrency for everyday transactions like this. Okay guys, really quick, one last thing. If you're interested in this topic and you want to learn more, go ahead and pick up our free ebook. The link will be right down below in the description. Urbana Real Estate just released a free 8-page ebook on buying real estate with crypto, and it just goes into a lot more detail than what we were able to talk about in the video. So guys, thank you so much for watching. I really hope that you've enjoyed the video and that you've learned something. If there's anything I missed or anything that's changed, just let me know in the comments down below. And once again, please hit the like button and subscribe to the channel for more content like this. I'm Marc Sinnott with Urbana Real Estate. Feel free to reach out to me directly if you have any questions or want to talk about this stuff. Obviously, I love talking about this stuff. And thank you so much for watching. I'll see you in the next video.